Nuclear energy is heating up, and in a good way. There's one company that could supply the next generation of nuclear reactors with the fuel they need. That company is Centrus Energy. Its stock has jumped 90% in the past month. But that kind of spike doesn't always mean good news. So today, let's break down the hype and figure out whether Centrus Energy actually has potential, or if this is just another flash in the pan. 1. Why is nuclear getting so much attention? Lately, nuclear power has become a hot topic. Big companies are mentioning it more in earnings calls, and investors are starting to take notice. Just in the last 6 weeks, a uranium ETF jumped 63%. Centrus Energy, ticker LEU, surged 180%. Constellation Energy, a major utility company, rose 43%. Meanwhile, the S&P 500 only climbed 6%. That's a big gap. But the real question is this all just hype, or has something really changed in the nuclear energy space? 2. What exactly does Centrus Energy do? Centrus is getting a lot of attention right now, and for good reason. It's the only public US company focused on nuclear fuel enrichment. One of just 2 licensed to make LEU, low-enriched uranium. And the only one with a US license to produce HALEU, high-assay low-enriched uranium, the kind needed for the newest generation of reactors. That puts them in a strong position, especially with growing interest in advanced nuclear technology. 3. What's LEU and HALEU? Let's keep this simple. LEU, low-enriched uranium, is what today's nuclear reactors use. HALEU, high-assay low-enriched uranium, is a more enriched version that future reactors will need. Centrus has the only US license to make HALEU, and that's a major edge in the market.
4. Centrus has a complicated past. Back in 2013, Centrus used to enrich uranium directly. But they ran into serious problems: high operating costs, falling uranium prices, a global oversupply. After the Fukushima disaster, they eventually went bankrupt and shifted their business model. Now, they mostly act as a broker, buying and selling uranium without enriching it themselves. But they're planning to get back into enrichment, which could change everything. 5. 2 parts of the business. Centrus now splits its work into 2 main parts. 1. LEU segment, mostly brokering uranium for now. 2. CTS segment, includes in-house uranium enrichment. 2. This is where their HALEU production will happen. The CTS side is growing and could become their main focus, but it's also capital intensive, and that means big spending. One concern is that while revenue grew 40% in 2024, their gross margin fell from 35% to 25%. That's a sign profitability may not grow with revenue. 6. Who's buying their fuel? Most of their customers are utility companies, both in the US and abroad. These are the folks running nuclear power plants. But here's something to watch: 2 customers make up 1/3 of their total revenue. That's a lot of risk if even one of them pulls back. 7. How big is the market? The uranium enrichment market is worth about $10 billion a year at today's prices. Centrus currently has less than 5% market share, but if they can ramp up HALEU production, that could change fast. They're hoping to benefit from $3.4 billion in government investment aimed at boosting domestic production of LEU and HALEU.
8. Who are they competing with? The uranium enrichment world is controlled by 4 big players. 1. Russia's Rosatom. 2. Europe's Urenco. 3. France's Orano. 4. China's CNNC. Centrus is positioning itself as the American alternative, especially important as the US tries to reduce reliance on foreign fuel. 9. The bull case. Why people are excited. Here's the optimistic view. 1. Data centers need massive amounts of power, and nuclear may be the only practical source. 2. The US wants energy independence, especially for critical infrastructure. 3. Centrus is the only company licensed to make the fuel these new reactors need. 4. They get government funding, build out their capacity, and become the go-to source for HALEU. 5. Eventually, they grow from a $3 billion company to $30 billion, pulling in $5 billion a year in sales. That's the dream. 10. But there are real risks. Here's the reality check. 1. Gross margins are shrinking. 2. They've already gone bankrupt once. 3. Political risk is high. What if a new administration cuts nuclear funding? 4. Dilution risk, they're selling shares to raise money. 5. Volatility, uranium prices move a lot, and that affects them directly. They're making moves while the market's hot, but that doesn't guarantee long-term success. 11. Final takeaways. If you're thinking about investing in Centrus, here's what to keep in mind. 1. They're trying to rebuild a uranium enrichment business, and it's expensive. 2. There's a big opportunity, especially with HALEU, where they have no direct US competition. 3. But execution is everything, and a lot of it depends on external factors they can't control. Things to watch going forward. 1. Their ability to scale without killing margins. 2. How much debt or dilution they take on. 3. Spot uranium prices. 4. US government energy policy. And remember, there are other ways to invest in nuclear. Think uranium miners, utilities, and small modular reactor companies. Centrus might become a major player, or it might burn out. Either way, now you have a clearer picture.